I'm going to do today's video on the stock market. Um, there's still some question, at least in my mind, as to whether or not this larger intermediate cycle that we're in right now is only going to have two smaller daily cycles or three. Um, and I'm still leaning more towards it's going to need three daily cycles before we bottom. So here's our first daily cycle right here. Let me annotate this. All right. So this was our intermediate cycle low, and I'm pretty much convinced this is also a 4-year cycle low. The last one, of course, coming in early 2016. So this is right in the timing band when we would expect a 4-year cycle low. So I'm not really expecting price to break back below this low. So I told everybody, back when this was happening, that the market, you didn't have to panic over your 401ks. The market was going to come back, and the S&P is within a few percent of its all-time high, or was here anyway. And the Nasdaq actually made new all-time highs and actually broke above that 10,000 mark that I've been telling everyone for years was going to be achieved. We're still in a long-term secular bull market. Still has at least 10 years to run. So 10,000 is just a stepping stone. We got a lot further to go in the next 10 years. But for the weeks and months ahead as we move into the election, what I'm going to have to see, I want to see how this next week plays out. If we were to get some kind of severe crash scenario, something that looks kind of like what happened back here, where the bottom just drops out of the market, and we come back down and test, maybe between 2,400 on the S&P and 2,600, and we do that in the next, let's call it 2 weeks, then that would be our intermediate cycle low, and then that would be where you would want to buy again in preparation for another rally that would take us, at least into the elections before the next corrective move. For people that are just long-term holders, you can just ignore all this, just like you could just ignore this. Before this bull market is over, this is going to look like a blip on the chart, similar to how the 1987 crash. By the time we get to the top in 2000, that crash was just a tiny little blip on the chart as well. But in real time, of course, this was a 30-35% decline. This was pretty scary. So I'm fairly convinced that we put in the intermediate top here. So I took everybody out of positions whose accounts that I manage, and the few people that I help with their accounts or portfolios, I also warned them to go ahead and take profits on their positions, and those people were in tech and in semiconductors, and those have all broken out to new highs. So while most people have watched their account drop 35% and then come back almost even, but not quite, the people whose accounts that I have managed, we didn't take this drawdown because I got out early here. I saw this crash coming, and then we got in at the bottom. So most of the people that accounts that I help them manage are not only not down, but they're up big so far this year. Big, all new highs on their portfolios. So back to the market as it pertains to the next week or two. So again, I'm going to be watching. Next week will be critical. If we continue kind of a choppy move next week and we maybe bottom somewhere right around 2,800, then that's not going to be, I would not label that, I guess, as a final intermediate cycle low. And in that case, we're going to need another rally, and then we'll have another entire daily cycle that will give us our final intermediate cycle low at the end of August. So let me draw that in. All right, now keep in mind these aren't exact targets. I'm just trying to give an idea of the trajectory of what I think is coming. This is what I think is probably most likely. I think this correction that we started back here, you can see the bounce was not able to get above this high here, so we've kind of ended the pattern of higher highs and higher lows. and I believe we're about to next week we're about to make a lower low by breaking below this. When that happens, it's usually a sign that the larger intermediate cycle has topped, and we're now moving down into that intermediate cycle low. So I'm expecting some more selling, probably through most of next week, maybe into the week after, and then I think we get another bounce, another attempt to come up here and make a higher high, but I think it's going to come up short. And then I think we're going to have a long slog down into that intermediate cycle low as we get closer to the elections. The media is going to ramp up the rhetoric. They're going to play up the virus for all it's worth. They're going to try to keep the economy in recession and shambles. The liberal media wants to have the economy in distress, because that's the only chance they're going to have of taking back the government. So that's what I think is going to power this. I think we're just going to see the rhetoric really turned up to a deafening roar on blaming Trump for everything that's happened, and I think it's that's probably going to trigger or power this move back down. And then we'll get our bottom here probably last week of August, maybe first week of September, and then we'll start to rally into the elections. And depending on if the Republicans sweep both houses and the presidency, the market is going to take off like a scalded cat, and it's never looking back again for the next 10 years. So, if you want your 401k to go up, you definitely want the Republicans to sweep, and if that happens, then we can actually get something done. We're not going to have, continuously blocking any efforts to accomplish anything that'll help the country. If the Democrats were to sweep, which I don't think is likely, but if they were, we're going to be stuck. I don't think it's necessarily going to be terrible for the stock market, but we're not going to have that massive rally for the next 10 years. The Democrats are probably going to drift further and further towards the socialist agenda. They've just damaged the economy, and their cure for righting the economy is going to make it worse. They're going to move more towards socialism. They're going to destroy. Not only are the middle class and the lower class already suffering, but they're going to take down the upper class too, the one class that could rebuild the economy. So they're going to tear everybody apart, and it's going to, it's not going to be good for the stock market. We would be trapped in a volatile back and forth market for the next 3 or 4 years if that were to occur. So let me widen the chart. All right. So if the Democrats were to sweep, I don't think it would be devastating for the stock market, but this is what's going to happen. We're just going to get in this long, sideways, choppy, back and forth. Nothing really follows through, no breakouts, and then big, scary corrections, bear markets, as the policies that they try and implement just damage the economy further rather than fix anything. So your 401ks are not going to be happy if the Democrats were to sweep the government. Your portfolio is just going to see a lot of back and forth and ups and downs. And usually what happens in these kind of environments is people that don't understand markets, they get really happy up here, and they can't pull the trigger to sell their portfolios. And most people just don't sell their retirement funds anyway. But then you get these nasty, terrible corrections, and people get scared. They watch their portfolios drop by 30-40%. They get scared and they sell at the bottom. So typically what happens is people sell here, somewhere in here they finally become confident again, and they get and then they fail to sell again, so then they sell again down here. So this is a pattern that is likely to cost a lot of people a lot of money in their retirement accounts, simply because of the way human emotions behave. we can't sell up here and we shouldn't sell down here, but that's what most people do. All right, so now let me show you, well, I can show you on this chart. If the Republicans were to sweep, we're going to see this again. There is a reason why the market did this when the Republicans swept uh, both houses in the presidency in 2016, is because we could actually get something done, and policies could be implemented that would help the country, and it did, and the country was improving and improving significantly. Lowest unemployment rates in decades, and for some races like blacks, it was the lowest unemployment in history. And until the coronavirus hit, we were on a good trajectory. But now we've had the bear market into the 4-year cycle low. We've had the V-shaped rally, just like I told people was going to happen. And now, it's just going to boil down to what happens in the elections. I'm going to say that if you want your portfolios to do well in the years ahead, we really need a sweep by the Republicans. Otherwise, if the Democrats get in, I think they're going to damage the economy even more. I think they're going to crush the one remaining class that is would still be able to rescue the economy and get things back on its feet. Um, and if that were to happen, then we're looking at something that looks like this in the years ahead. All right, so moving back to that shorter time frame, the daily charts, it's just going to boil down to how next week plays out, I think. If we get a really big, nasty crash, something where we're seeing 5 and 10% down days, like we saw back here, then we're going to get our larger intermediate cycle low maybe next week, probably the week after 4th of July, and that will be the buying opportunity. If not, if we just come down and maybe don't go much below 2,800, then we'll get a little rally, but your major buying opportunity is not going to come until the end of August.